Namaste, welcome to Arthaniti. Today I will talk about Paytm. All of us know Paytm. Paytm made it big after the demonetization drive by the Narendra Modi government, and digital payment became a rage in our country. Right? Paytm was founded by Vijay Shekhar Sharma. Now, this news that came in on Friday that RBI has imposed restrictions on the Paytm Payments Bank, which was started in 2015, to take on any new customers. So basically, RBI restricted the payment bank from taking any new customers. Why did it do so? What is a payments bank? What is the way forward? Let us check. What is a payments bank? Payment bank is allowed for you to make payment. As simple as that. It is not like any other commercial banks where you can hold money, take a loan, make payments, and generally transact through your cash. A payments bank allows you to open savings accounts with it and make payments through it, basically through digital mode. Now in a payments bank, you can deposit up to 2 lakh rupees save with particularly the Paytm Payments Bank and get around 2.5% on your savings account. Now normally in a banking system, how does a bank earn money? See, it is a transaction business. People deposit money in the bank, they keep fixed deposits, they keep saving deposits. Interest is paid by the bank to the people. So it is a cost that the bank incurs. How are they going to earn money? By giving away loans, right? The difference between the loan interest and the interest that is paid on the savings and fixed deposit is that gap is the profit the commercial bank makes. But in case of a payment bank, it is not allowed to give loans. It is only allowed to keep savings account wherein people deposit money and make payment. See, any banking business has to earn money to stay in business. So how does a payment bank earn money? Basically by data monetization. They sell your data, correct? Your transactions, where you purchase, what is the amount on an average that you make purchases on, what are the stuffs that you buy. All this data is sold. So data monetization is one of the major factors of earnings of a payment bank. They can cross-sell you products. Like say a Paytm bank will be cross-selling you mutual funds, say from an SBI or an ICICI, HDFC and the likes. Likewise, insurance products also from various insurance companies are sold through this bank. So the commission that they earn on the mutual fund and the insurance form parts of their earning. Right? Now, they can also give you loan, not by themselves, but being an intermediary like a broker. They can give you loan from another bank or an NBFC and sell the loan products on their portal so that you can buy it. Again, a commission business in which they earn money. Now, why did RBI impose a restriction on the bank? The order taken out by the RBI says that there were lapses, statutory regulations were not followed, and there were lapses in the way data of the customers was maintained with the bank. Now, yesterday, Bloomberg, one of the leading financial newspapers, came with a report that this data of the customers was transferred to the Chinese companies who form part of the shareholders, who are shareholders in Paytm. Now, all of us know India's equation with China, right? So, this data flow outside the country was where RBI took objections and laid down restrictions. Following this report by Bloomberg, Vijay Shekhar Sharma, the founder of Paytm, like flatly denied this report, saying that this was not the case and data was not being transferred to China. One thing we must know here is this is not a problem with data passing on to China. RBI has strictly laid down restrictions to all financial institutions to maintain payments data of customers within the country. So there was a problem with Master and Visa card, Maestro cards, all foreign cards that were issued in India used to transfer data outside the country. So this was basically breach of privacy of the citizens of India, and the data was could have been misused. So RBI came out with regulations saying that customers' data cannot be transferred outside the country. It has to be stored very much within India. So this was a bone of contention as per Bloomberg report that was not followed by Paytm. One more case that was involved, one more point that RBI took objection on was the KYC that was done while opening the bank accounts. Now, all of us have to face KYC. KYC is know your customer, right? It is a safeguard against the customers and bad money laundering practices. It basically helps the bank understand the source of money and the authenticity of the person who is operating the account, who is owning that account, correct? So this basically restricts money laundering and black money practices which were rampant in the country. So KYC is very much a laid down RBI regulation. With Paytm, this KYC was not followed to the tilt and some accounts were opened without completing the full KYC documentation. Basically, there are 3 steps in any KYC. You need your face proof, so you need to give your photograph, you need your PAN number and you need a valid address proof for your KYC verification. So without this process duly getting completed, some accounts were opened with Paytm. That's what the report, newspaper report stated, and that is the reason why Paytm was put under restrictions and an IT audit has been asked to be undertaken by the company to fill in these gaps that were majorly not as per the RBI guidelines. What has this resulted in? Paytm shares are on a downfall since this news came out on Friday. Paytm shares are going down the slope, not stopping, and more than half of the IPO investors' wealth has been eroded in this case. Now, before you invest in startup IPOs, it is very necessary to understand the business of the company, the how the company is going to fare, what are the practices that are followed by the company, is the company profit making, what is the track record of the company. Don't just blindly invest in startups just because there is a hype around the company and a lot of content, online content is available where people are promoting it because content is sold for money. So make your own decisions on your own, think for yourself and safeguard your money, right? What happened with Paytm is a good lesson for new investors about how to invest in startup IPOs. I will follow up on this news and I will let you know what happens to Paytm and if the restrictions are removed by RBI. Keep following my channel, subscribe to my page and like my videos. Thank you.